And for more on today's agreement and what it might mean for the region going forward, I'm joined by Francois Rivasseau, Deputy Chief of Mission for the European Union delegation to the United States, and Dan McCrum, a correspondent for the British newspaper, the Financial Times. He's based in New York. Francois Rivasseau, Angela Merkel said this is the breakthrough to the Stability Union. Now, what exactly does that mean? Is this truly a new kind of union within the European Union?
It is an historic day for Europe indeed, because we have made a great step towards more integration as the proper way of answering the crisis we face. We had two goals. One, to tighten, to watertight the rules of the EU against the problems caused by debts and deficits. That will be the treaty you allude to. The other goal was to strengthen the firewalls to defend the euro. That we have also achieved. So I think it was a great day for Europe.
Well, these changes won't take hold for some time. Is the expectation now that because of this deal, the European Central Bank, the IMF, others might step in with greater force to stem the kind of problems we're talking about?
We shall see what the effect of the decisions taken yesterday are. But all in all, if you look at where we were and where we are today, I think we have made a great step in improving all the figures. There are a number of decisions which have been made that everybody has to study quietly, serenely, and everybody will realize that very significant decisions have been made. Strengthen our crisis funds to defend the euro and speed up their implementation, but also, and what is important for the market, solving the problem of the association of the involvement of the private sector to the decisions to be made. And we have decided, and that was an important point maybe for New York, we have decided that the rules of the IMF, the principles and practices will be now followed. The precedent of Greece will not be repeated.
We're followed by individual nations, and they'll be held to it.
Will be followed by the Eurozone countries. Mm-hmm. And also we have engaged, as Christine Lagarde just said, important cooperation with IMF, and I think all that provides, I hope, an answer which will be seen as satisfactory. Now, nobody can foresee the future completely, obviously.
Now, Dan McCrum, explain the reservations from David Cameron. What exactly is he afraid of if Britain signs on?
Well, David Cameron has a very strong and distinct Eurosceptic political party back at home. And so they are very anti-European. The populace of the UK is very Eurosceptic as well. The European Union isn't particularly popular. So he faced an unpleasant challenge of attempting to sell any treaty to that party back home. And so what he'll get is he'll get a short-term political boost from this. And he'll be able to say that he has protected the financial services industry, which is incredibly important both to the economy of London and to the economy of the UK as a whole. But I think what he has fundamentally come away with is very little in real terms at a cost of really distancing the UK from the rest of Europe with some quite dangerous long-term consequences.
Well, what would those be? What are the potential repercussions that people are talking about now for Britain and for the EU?
Well, I think it's now much more difficult to answer the question, will Britain still be in the European Union in 5 to 10 times? And that necessarily will have an effect on the way businesses think about investing or trading in the UK. And also, he hasn't really protected the financial services industry, the supposed reason for this veto. But because the European Union can still act to change the rules through majority voting, the countries which are forging ahead without the UK can still impose different financial regulations.
But more difficult.
Now they have a...
Excuse me.
And now they have a particular incentive to do so, now that Britain has decided to step away from the negotiating table.
No, but I was going to say, so it really comes down to, we're talking about a historic day here, but in Britain it seems historic in the sense that Britain may no longer be in the EU within a few years, you're saying?
It certainly could feed into that statement. And I think that the important thing to realise about this agreement is that whilst there have been some small steps to help solve the banking crisis and the sovereign debt crisis, I think Europe has potentially opened up the doors to a new political crisis here, which may bring into question the euro and particularly Britain's role within it in the future.
All right, let me ask Mr. Rivasou, are you concerned about that political rift?
We obviously would have preferred UK to be in. Everybody would have. Now, at a certain point, you have to choose, and the choice has been made by all the other 26 countries, either to go forward for the countries of the Eurozone, either to consider and ask to Parliament for the other countries not member of the Eurozone. In my view, the fundamental choice, we have to respect the British decision. The fundamental choice has been made when UK has decided not to take part in the euro. And this is a choice which has been made in the Maastricht Treaty 20 years ago, almost 18 years exactly. What we see today is something which is very important, but which is, in my view, a consequence. And so I'm not sharing, with all due respect and the pessimistic view.
You don't see a potential two-track?
No. In the EU, we are used to situations where one country or two can stay out of a social chart, out of the euro, sometimes out of some defense dispositions. There are precedents on that. The European Union can accommodate such situations.
Mr. Macron, Britain aside here, we've had so many ups and downs in this crisis and moments when the markets go up and then they take another look and they go down. What do you look to immediately to know whether enough has been done to stem the immediate problem?
Well, I think what everybody is going to be concentrating on is the bond yields for these countries, Spain, Italy, whether their borrowing cost starts to go down. And then looking forward to the new year, there has to be an awful lot of new debt sold. They have to roll over some of this debt. Italy in particular has 300 billion euros worth of debt it has to issue next year. And a lot of that is traditionally done right at the start of the year. So in January, we'll start to see what the private sector appetite for this government debt is, and that will start to give us an indication of the severity of this crisis and whether these incremental steps have been enough to avert a continuation.
What do you see on that? I mean, he just referred to incremental steps. I mean, this is the conundrum that we face every time we talk about this. Some steps are taken. It looks like everything's been solved. And then a few days later, well, no, the markets have said, wait a minute.
I don't disagree with the notion of incremental step, just that yesterday was a particularly important step. But as it has been said, the markets will have their own reaction. But what has also been decided, what we are all Europeans confident that, is that if the situation is not seen as fully satisfactory, there will be the appropriate steps. The important thing is to restore confidence. To restore confidence, we had to prove to the rest of the world that we were absolutely serious and that we were able to take all measures needed by the circumstances. Today we have taken that. If tomorrow other measures have to be taken, for example, if the level of the firewalls is seen as not enough, we have already decided that we will come back beginning of next year to reassess the level of the funds which are needed. We are absolutely determined to do all what is needed to make sure that this crisis is over.
All right. Francois Rivasou and Dan McCrum, thank you both very much.
Thank you.